you felt confused in today's market, you're not alone. Because this wasn't just a normal down day, this was a classic liquidity trap and slow bleed where most traders got caught on the wrong side. Let's break it down step by step so you can actually understand what happened. So first, the overall market context from the higher time frame, especially the daily chart, we can see the market is still in a pullback phase after a recent bounce. Price is below a key resistance zone around 24,500 to 24,600 area, and today it clearly respected that zone. On the 30-minute chart, the bias was slightly bearish. After a strong move earlier, price started forming lower highs and weak structure, which already hinted that buyers were losing control. Now coming to the intraday action. In the morning, after the open, we saw an initial sharp sell-off. That move was not random. It was a clear liquidity grab below the early support. Panic sellers entered here, and then what happened? Price gave a bounce. This bounce is where most traders got trapped. From around that mid-morning zone, price moved up and started consolidating near the 24,400 to 24,420 area, which acted like a pivot. Many traders assumed this was a reversal or trend continuation on the upside. But if you look closely at the 5-minute and 15-minute charts, the structure was weak. No strong breakout, no follow through, just choppy sideways movement. This was a classic distribution phase. Then came the real clue. Around the later part of the session, price attempted another push-up but failed to sustain above that same resistance zone. Immediately after that, we saw a strong bearish candle, a displacement move. This is where smart money showed their hand. That drop broke the intraday structure and triggered a cascade of stop losses. Retail traders who bought the range breakout got trapped, and price started a steady fall towards the day's low near 24,350 zone. Notice how clean the move was. No strong pullbacks, just a controlled decline. That tells you institutions were in control. So what really happened today? Buyers were initially right during the bounce, but they failed to hold structure. And the moment price couldn't break resistance, the entire bullish narrative collapsed. This was not a trend day. This was a trap day with distribution followed by breakdown. Now the biggest lesson from today: first, never trust a breakout inside a choppy range without strong momentum. Second, repeated rejection from the same level is a warning sign. And third, when price becomes slow and sideways, it usually means something big is being prepared. And today, that big move came on the downside. Now for tomorrow's outlook. As of now, the market is weak. The immediate resistance remains around 24,400 to 24,450 zone. Unless price reclaims and sustains above this area, any bounce can again face selling pressure. On the downside, the day's low area around 24,350 zone becomes important. If that breaks with momentum, we can see further continuation. But if price opens and holds above that pivot zone, then we may see another range or short covering. So tomorrow, don't predict, react to levels. And always remember, the market doesn't move to reward the majority, it moves to trap them first. If you found this breakdown helpful, make sure you come back tomorrow, because we decode smart money here every single day.